It's payroll day in America. Should we care? Joining us now, Markets Live executive editor Mark Cudmore. Mark, do you care?
Day traders should definitely care. From a macro point of view, no, I'm not really paying too much attention. This is not going to change the views for where the Fed is pricing into next year. I think we have too much policy uncertainty, and next year could still be a very binary situation. We've just got such a massive scope of outcomes. There are potentially a lot of inflation boosting policies coming through, but we have to see whether they actually get delivered, and we have to see what the full spectrum of policies that come through from the Trump administration. However, for short-term traders over the next couple of weeks, we've got a rate cut from the Fed that's about 70% priced in for less than 2 weeks away. And today's decision will either confirm that is happening or put more doubt around it. So therefore, it will affect rates at the front end. That means it'll affect the dollar. That means it'll affect stocks for a short term. So we'll kind of trade it today, this afternoon. We'll trade it into Monday. It's the kind of short-term trading that I always used to lose money on. So these are the kind of days that at 1:30 p.m. when it comes out in London, I'd go to the pub at 1 p.m. so I wouldn't lose more money and then assess it over the weekend instead. A much better situation.
Well, Mark, that actually might be valuable to our audience. With that context in mind, tell us what you would do.
Well, as I said, if I was able to, I would go to the pub. Fortunately, because I know that non-farm payroll is Friday like this, where it's about the short term rather than the macro, it's some of the most dangerous trading because you might have the short term conclusion. For example, we get a strong print and everyone goes, oh my God, there's going to be doubt in the Fed cut. They won't cut in December. Maybe we get high wage inflation. And so everyone goes, no, they're going to ease off. And you get that initial reaction. But then because of pricing, it can reverse very quickly. That's why I find these short term Friday reactions are a different type of trading to the macro trading environment. So yes, today, to Guy's initial question, today really matters for some sector of the market, but for the macro audience, no, not really. They're still kind of processing France, which was kind of seen a pivot point this week. They're wondering what the next developments are in Korea. They're wondering whether Bitcoin has another leg. But I think many people are managing books into year end at this stage.
Yes, really interesting. So thinking we are close to the year end then. Really interesting the way that the politics has, and to a large extent, not moved risk appetite over the past week, Mark. Whether you look at Korea, you look at France. I'm looking at the MSCI Global Index, and we're much higher than we were at the start of the month, which, given all of the political headlines, you might have thought might not be the case. But we seem to be able to put this aside.
Well, Korean stocks are even cheaper. They have had a long discount for they had a discount for a long while, but they're even cheaper. So Korean assets have an extra premium. I think it's going to stay for a while. I think French assets have underperformed all year. We know that actually the CAC 40 has done very well recently, but that's because it had massively underperformed. I think it's going to do okay in the short term. As we were saying in yesterday's show, I think that the outlook for France is not very positive, but this is not the time to pay the bearish scenario. I think next year there'll be a chance to refocus on French stress again.